Morning, everybody. Morning. Helps if I turn the mic on, doesn't it? Wow, that's really loud today. Let me turn myself down a bit. There we go. How are you all doing? Good morning. Right. Let me just check you can see everything on the screen because I was mucking about yesterday with my platform. There we go. That's better. Somewhere around there will do fine. How are you all doing? Morning, Yoko. Morning, Mumo. Morning, Fire. Morning, Danny, who is a member because he has a little blue badge next to his name. Morning, Callum. Because you get a extra special shout out, Danny. Morning, Dynamic Precision. Virginia, Gregors, Paul, Themba, Gerard, welcome. Couple of quick changes in the stream. I now have turned comments on in the stream. So if you're watching this on replay, because I've realized there are so many people watch this on replay that don't come to the rooms. And now I'm doing the private members streams as well. It's the same thing. We're going to need a comments section. So if you're watching this on replay and you've got any questions, comments are below. So there you go. So live chat, obviously, chat away. But if you're watching on replay, comment. So yeah, basically lives will start next week, the private streams. I'll publish the schedule over this weekend and I'll post it in Discord. Other news, I've disabled posting in the Telegram group. The Telegram group has got 4,800 members. I suspect 50% of those are bots or spammers or scammers. Is my mic really loud this morning? Because I seem to be peaking up in the yellow a lot and I don't know why. I'm just turning myself down a little bit more because otherwise we're going to get a load of distortion. So yeah, so I've disabled posting in the Telegram group just because I want to use one place to focus. So it's Discord. So I'm going to focus all the attention on Discord. I'm still contactable in Telegram. The group is still there in Telegram. There'll still be posts going out in Telegram. It's just I don't want two areas where I have to monitor and manage, basically. So yeah, so there you go. Other news. News today, trading news. It's Canadian dollar day today. Well, it's not. It's PCE for the US as well, but it's Canadian GDP and PCE for the US this afternoon at 1:30, an hour before the market opens. We had Powell speaking yesterday before market open. We had a massive move yesterday. What a day yesterday, profit-wise. Killed it. NASDAQ, straight out the gates, 5R and beyond. Really good day yesterday. I'm up to $3,000 this week, which is lovely. But yeah, so really big day yesterday on the indices. We had the US GDP and unemployment come out yesterday pre-market open as well, which was ever so slightly bullish, but pretty much as expected. And we had the Swiss rates come out at 1% as we expected, and no more news out of them. So that's today's news coming up. We've got obviously GDP and PCE for the US to worry about. We've just had this morning, and it's still going. The yen have announced, or the Japanese have announced they have a new leader, basically. So the ruling party leadership election, the next prime minister has been announced, which is Shigeru Ishiba. So I was not aware there was even anything going on in Japan with elections and stuff. And all I saw basically was a massive move on the yen. It's just bang, 5 minutes we were 200 ADR on most stuff. So I posted in the group in Discord that we had possible intervention going on, and then obviously that news pinged up. So but big move, big positive move on the end. So Japanese and the market obviously like the fact that this guy's got in charge. I don't know anything about politics in Japan, but market seems to like it. So yeah, big spiky move gone in there. There's a possible mean reversion option on this, obviously, because this is a massive reaction and a massive bull move in the yen. I'm not quite sure why. Whether this guy has said, if I get in, I am going to make sure our economy explodes and we get a load of money coming into the yen. If that's the case, that might be the reason for the move, but I've no idea why they've decided to go so heavy on it, but they have. So big move on the yen. Other overnight news, not really anything. As you can see, we had CPI come in on target for Japan as well, but other than that, not a lot. Let me just go back. Oh, I was going to look at the Powell comments. There weren't any. So that's why the market didn't move pre-market yesterday. So there we go. Yeah, so there we go. So that's overnight news and what we've got coming up today. Kyle, welcome to the private streams. Well done. He has subscribed and he will be getting the extra content next week. Welcome aboard, Kyle. Had quite a few people sign up yesterday for the private streams next week, so that's good news. If you've got any content you want, there's a members section here, where basically it gives you all the member stuff. You can join the Discord server, and in Discord now we have a dedicated area in Discord. There we go, you see that here, called YouTube members. So any of you that have joined the streams, the private or the membership streams, whatever you want to call it, I don't, it's private streams I've called it, but the membership streams, basically we've got this section here now in Discord, so you can go in there and anything you want to discuss, put it in there, or stick it in the comments section on any stream, or just get in touch with me generally, basically, in any way you want. But any ideas you've got, anything you want to cover apart from what I'm going to schedule, that's the place to pop it anytime you want to. So yeah, so you can put that in there, Kyle. There's a little poll in there as well, which one person has filled in. It's just a little what you're struggling with most in trading, and I've put the main things that people have problems with. So knowing when to exit a trade, we will cover that next week. I'm just going to put that in there. I've got a little document going basically for just chucking content on so I can plan these streams in more detail. But anyway, so yeah, massive move on the euros. So there's a mean reversion opportunity on all of these. If you switch down to M5, obviously wait for signs of strength before you start to get in. So euro yen here, we've got a little hammer going in at the moment, but reversal alert. So wait for them to confirm a structure break down there, or you can just take a moving average cross and get in. So if you're using the position trader EA or the market reversal alerts EA with ADR extensions, you will be getting signals on every single yen pair today. So just be aware of that. Don't overexpose. So there's a lot of opportunities there. So every single yen pair basically this morning has hit ADR extension. RSI wise, Aussie yen is also extended on the 4 hour. Well, it was. You are now out. So there's your payday basically today if you're in any yen shorts. I got out of my Aussie yen already. Swiss yen extended to the upside. That's down. Euro yen was extended down. Pound yen was extended down. It's just this, any trades that you've taken on H4 RSI extensions over the last 2 weeks, you're getting paid this morning. So good job. And New Zealand yen as well. So apart from that, there are no RSI extensions at all today to look at. So I'm going to go through all the pairs today. We'll have a look at everything, how everything's going. Other news on Discord as well, I've updated so that we've got a dedicated ADR reversal channel, and we've got a dedicated RSI mean reversion channel as well. So I'm going to start posting a lot more trades in there that have been completed. I've done some this morning, just basically to demonstrate the strategy continuously. So basically it's just sort of thinking in exactly what strategies are. So yeah, there we go. So there's your RSIs covered. So there's not a lot else to look at there today. So Today, no trades, no trade at all on the DAX. Long on the FTSE. Why is there no trade on the DAX? Range is too small. Okay, so pre-market range today was 200. We needed 224. Opening range today 190. Needed 224. So yeah, no trades on the DAX today. Pre-market range. I don't take the entire pre-market range. That's the first hour, but the first sort of anything up to 6 candles before they designate the pre-market range was too small today, so not enough price action, and the open was too weak. As you can see, this is exactly why I wait for a good 10% move. You can see it's completely whipsawed at the open. That's what you get when you've got no volume. You don't get any direction. So no trades on the DAX today. Long on the FTSE. So taking the opening range, or rather the pre-market range break today. Not really got anywhere either though. So yesterday's US indices, screamers yesterday. The Dow, that candle there, this one, this absolute pretty much dead stone doji was the open yesterday. It was absolute whipsaw, completely whipsawed up, completely whipsawed down, and then spend the rest of the session within that range, and it closed basically pretty much just at the high of the range. Awful Dow. So that was hedged yesterday, which is about a $300 loss. Nasdaq, however, open on the Nasdaq yesterday was an absolute screamer. You can just about see my trade on the chart here. So I took the pre-market break, so that was the pre-market range. That was your opening range candle. Yeah, so opening range basically did about 2R, and it just collapsed straight down to 3R, and it collapsed straight down to 5R. I got out at 5R. It did 10. So if you had held that, I mean, you wouldn't have, but I mean, maybe some people did. But the only 2 candles yesterday that told you it's time to start thinking about getting out of the Nasdaq was that one, which was an inside bar, didn't even break the high, and that one was a bullish engulfing. So that is a higher high, higher low. So that is the candle really that most people would have looked at and gone, "Phew, that was a good trade." If you hadn't and you missed it and you were making a cup of tea at that time, you got an inside bar break to the downside to 10R. Absolutely destroyed. After spending the entire morning rallying like crazy on some semiconductor sector purchase. So yeah, absolutely amazing trade yesterday on the Nasdaq. Made my week. But yeah, if only they happened every day. Wouldn't that be good? So we'll come back to these in a minute, but DAX today, no trades, it's not going anywhere. We've got a gap fill to the downside to sort out on the gap on the DAX still as well from the open was up here somewhere, but yeah, there's a big gap down on the DAX. Right, let me just catch up on chat. Morning, everybody. Haven't said morning to. I can't remember where I got to. Themba, Gerald, Pot DJ, AZ. Struggling to join the private. They wouldn't accept my card. Oh, all right, okay. What, YouTube wouldn't? Weird. Don't know why. Morning, Travel. Morning, JC, Neo, Ismet. How are we doing? So, today I'm just going to go through the pairs. I've got a lot of work to do for next week's streams. We need a place to meet outside of YouTube for people that are in. So I've set the Discord channel up. So if you can go and join Discord, if you've joined the private group, that would be fantastic because I need to communicate with you outside of here. So it would be good if you can get into Discord as soon as possible. At the moment, those channels don't seem to have any members in. So I've got all the memberships are in there. Yeah. So I can see the memberships here. We've got private stream members, super supporter members, and mega fans and testers. I have one. Thank you, Yusuf. So the memberships are showing there, but I need to know if you guys can see this channel, and I can't see anybody in Discord that is actually in the memberships. So there might be a few teething problems as we start up, obviously, but I need somewhere to communicate with you and put the plan together and discuss the best way to execute it. So the people that have contacted me so far about next week, seems to be, the consensus is to spend a week doing something and then a week doing something else. Yeah. So we will have dedicated weeks to training and a dedicated week to strategy development, and then a dedicated week to training or strategy development, depending on whether we've caught a fish and we need to get on and develop it further. And do it that way, rather than trying to split the week into a little bit of this, a little bit of that, a little bit of this, a little bit of that. But I want input on it, really. So again, comment section if you're watching the replay, Discord if not. That seems to be what I think most people want. So I'm going to put together a plan for next week for probably strategy development or training. I'm not sure which yet, but we'll see. Just try to enter Discord members area. It says messages failed to load. There aren't any messages. Hello? Anybody there? I can't type today. So I'm just typing, hello, anybody there? Did you see that? Probably why you're not seeing your members. Discord's confusing for me. I need it's all linked. It knows who you are. I don't know. I need to figure it out. That's on my list of to-dos today. Worst case scenario, I'll make it public so that you can get in anyway, regardless, and then I will figure out the membership bit later. Or I can invite people. I can invite individual people in. Kyle, are you in? You're in YouTube, are you? On Discord, I can invite you. Here's a list of all active invite links. Oh no, I can add people into it. So you're just watching me. Oh, there we go, Kyle. Let me find you. Kyle, are you just called K? I don't know. We'll sort this out later. Anyway, I'm not going to waste the entire stream talking about my problems being unable to operate Discord. Morning. Oh, good night, Vitaly. He's off already. I have some questions on ORBEA and trading futures in the US. So I'll ask next month during private streams. Okay. That's fine. Make sure you join, Vitaly. I don't know if you have or not. I haven't really looked at member list yet. Did some tests on the updated PTEA with 2% risk at 150 ADR using broker data. Interesting results. Would you be in a position to test one or two pairs? Yeah, I can do. Send me a set file, Mumo, and I'll test it now, live, here. Strategy Chester open, ready for input. With Discord and YouTube integrations, you just need to wait a bit. Oh, okay, fine. Because it says I've got no members. It's linked, and it shows me the groups, and it says there's no members in any of the groups. There are members in the groups. I can see them in YouTube, but Discord doesn't seem to. So maybe it is a lag thing. I don't know, but I'll wait. I only set it up an hour and a half ago. Danny, thank you for the $2. Welcome aboard. Not welcome aboard. Thank you for the tip. Very much appreciated. $2. What can I spend $2 Australian on? Part of a coffee. But thank you for that. That's very much appreciated. I always try and think about what I can spend tips on, because there's always a value you can put on a tip, and usually it's building up enough to go to McDonald's with the kids. Quince, online now, KQ. Yeah, I'll have to sort this out now. I don't want to spend the stream trying to figure out this, because it's not a very interesting stream. You're here to watch about trading stuff, not about how to set up Discord integrations. Of course, I will join. I know you will. It's going to be good. You need to separate roles in Discord. Yeah, I've got separate roles. Anyway, stop talking about Discord. Let's do trading stuff. Mumo, send me your set file and we'll do some testing. You'll have to send it. However, I don't know how you're going to send it. Tell me how you sent it. Morning, Guna. It's time. Right, analysis. So we're just going to run through all the pairs today because there's not a lot really going on apart from the yen, obviously, this morning. So the ADRs, obviously, we know it's yen today. We've got 225 on the Swiss yen. And obviously all the H4 RSIs, and in a minute you'll have hourly RSIs in about 40 minutes, all signaling as well, potentially on some of these. In fact, you won't on the ends because they're all extended to the upside. Look, I don't think they're going to get an hourly RSI extension on these, but when it does extend, I'm pretty sure you're going to get some kind of pullback. That's going to be the mother of all propulsion gaps. It's very unusual to see a move this big that's based on an election rather than something fundamental. I don't see how this guy makes the yen stronger. And this is something I don't know about him and his policies. Usually a new leader coming in does not mean the currency strengthens, because it might have a reaction, but why does he make the yen stronger? Especially by a 200% ADR move. Doesn't really make sense. So good mean reversion opportunities on those. They're all massively extended. So all the yen pairs, obviously, as you know, I'm taking the odds trade here and there on the yen. There's my Aussie yen long that I took last month. And I have had a short on the Swiss. I don't know. I took another yen short. I can't remember which one it was. Is it Euro yen? I don't know. But I took another yen short. Euro Swiss is just at ADR as well. I'm taking the odds trade, but it needs to be a AAA setup, basically. I want it to be really, really, really good. I don't know directional bias on the yen at the moment. Obviously, when you get something like this, which we've never seen before, an intervention of that magnitude, it's impossible to say, right, normally when they do this, this happens, because they've never done it to that extent before. So what typically happens on an intervention is after the intervention, they tend to continue the move. That's what's happened in the past. We've never had one this big yet. So I don't know whether the market's actually got enough faith in doing that, because the market doesn't like buying at the selling at the lows. It wants to sell at the highs. So it's whether or not this is going to continue from a fundamental perspective. And obviously this morning we've had that, and it looks like they are powering up again. But it's just on the back of that news. So I think you kind of need to give this news that we've had this morning a bit of time to sink in. So if you are going to take any yen mean reversions, just take one. This is a good trade to take. All of these yens are good trade to take because they're carry trades. So we'll be able to obviously make money on the swaps if you go long on it, which is good. So all the yens today, basically, mean reversion opportunities, drop down low time frames, wait for reversals to start. You're just about to get one on the Swiss then yen there. This is the most extended today beyond 225. There's your reversal alert. Just about to trigger. If you're using a moving average cross as well, like the 9, which I've got on here, you're about to get a signal on that as well. So mean reversion, but obviously because of the strength of this move, if it gets into profit, it's probably a trade that I would like to protect. Yeah. And just watch what happens with it, basically. So we'll see where we go with those yens. They're all the same, obviously. So, you know, it's the same trade. Whichever one you get a reversal alert on first is the one you can take. It literally is a play on this is extended too far. It's got to go backwards. So we'll see what happens. The Aussies at the moment, the bias on the Aussie is bullish. So at the minute, we are looking ideally for longs on Aussie because every other country at the moment is reducing interest rates. The Australians can't because inflation's too high. So bullish trades are going to work out faster than bearish trades. Sitting around for ages out. Yeah, so the bear trades are going to be more difficult to get out of because the profit take moves will be slower, possibly less, and potentially more flag break style. But going long obviously is going to be quicker because the move is caused by the other currency. The Australian dollar, because it's not increasing the interest rates and not decreasing, is neutral. So what it does is it makes it strong against the others because they're all reducing interest rates. So all other currencies have weakness trickling into them because of interest rate reduction and inflation reduction. The Australians don't. So it's not that the Aussie is strong, it's that everything else is weak in comparison. So that's why you're more likely to get those moves. That move was caused by the Canadian dollar weakness, not by the Australian dollar strength. So opportunities in both directions on it, really, because it's a neutral. You're going to find those are better trades, but either way, really. So there was an H1 RSI extension yesterday you could have got into, but obviously on Wednesday, that was the H1 RSI extension to the downside long. There's your reversal alert off. So really nice, easy trade there on that one. Aussie Swiss, I've got this one on already as a short. It's not the ideal trade, obviously, so I got in there on that extension. This was coming up to a weekly level I was expecting a bounce at. We did get a bounce a couple of times, but it didn't quite get to roll over, and then obviously it shot up again. Second entry, been sitting there for now a week. It's just not going anywhere. So we're totally stuck at the moment on the Aussie Swiss. It's just gradually grinding. It's a really nasty grind. These grinds are horrible because they tend to continue for a while. But this was a nice profit take on that leg. This leg here, we haven't profit taken. So I'm looking at that being the move at the moment. And I'm looking for a retracement on that move back into this area here, which is the sort of start of this week-long run. So it's not far away. Break even is there. You know, I'm well within ADR. Break even's only half an ADR away, so I should be able to get out of this if we get an ADR hit. If we test yesterday's low, for example, I might jump ship. One of the things I've been testing, as you probably know, is timed exits strategies. When trade setups and trade ideas don't play out, it's a good idea to just get out the trade if you can, because it's not worked out. If you're looking for a mean reversion trade, you want it to mean revert. If it doesn't mean revert and it sits there and does that and gives you an opportunity to get out at break even, it's probably the best thing to do. So this is one of those prime examples. I got in there late last week on Thursday, I think that was. Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, so last Thursday. It pushed up, second entry, flip-flopped around, got a break even, pushed up again. Another entry went in yesterday. Yeah, it's not working. So if this gets down to ADR and I can drag $300 to $500 out of it, done. Rather than waiting for it to hit target. Yeah, the initial trade idea was to come back down and retest this breakout, but didn't do it. So yeah, that hopefully we'll get a break even out of that one today. Aussie New Zealand is flip-flopping around all over the place, not going anywhere. Very difficult to get into this at the minute. As you can see, there's no relative strength. There hasn't been for the last couple of weeks. It's just sitting around. So nothing to do with it really at the moment. Aussie US pushing up again on US dollar weakness. So there's been a few opportunities to get into shorts. There's a nice retest on the hourly at the moment. So we've had the reversal alert there. If you'd have taken any kind of reversal alert on the H1 RSI extension on lower time frames, M5, M15, you're out, done. But if you didn't get out for any reason, you're retesting now. So this is potentially looking like a nice M. We're going to need weak news today, though, on PCE and ideally GDP as well for the CAD, because they'll both interact with each other. But ideally PCE coming out weak, strong, and that'll drive that back down again. So yeah, nothing much else to do with that one at the minute. 4 hour I think was an RSI extension. Yeah, so we had an RSI extension on the 4 hour this week. I didn't take this. I'm being very strict with myself. I took that one. No, I didn't take that one because I was already in the New Zealand dollar, US dollar. But there was one there as well. it didn't quite hit target, so I didn't get in. It would have been a very nice, easy, quick in out in 24 hours, but I missed it, unfortunately. So opportunity there. That will give you a reversal alert. This is a big, strong push we've got going on at the moment, but obviously it's because of this US dollar weakness and obviously neutrality in the Aussie. So you can see it's been a tricky one to trade. Not very clean at all, but it's worked. So just waiting for it basically to do something, but I'd be much more interested in shorts than longs and a pullback on that leg. We have just broken out into new monthly highs. So you can see basically what it's doing. You've got an outside bar there. So that's last month. That's the previous month. So you've got basically an outside bar painted last month, which is indecision. So far this month, we're pushing up. And basically, if it pulls back inside here, it's a rejection. So potentially coming back down to retest this area at some point in the next month or so. But we'll see. We need some US dollar strength to come through. And at the moment, it's weak. They have dropped their interest rates very, very, very quickly. Much quicker than we were anticipating. We were expecting 0.25%. We got given 0.5%. Inflation is pretty much not to target, but it's close. It's 0.5% away from target, and it's coming down quickly. Unemployment is also coming down, which means that they can drop that much faster. So it is a lot more bearish than we were expecting the US. So it might find it difficult to do this move, but we will see. But right now, there's no signals or anything on it that I'm in. CAD Swiss, total sideways. Just not really going anywhere. You had a 4-hour RSI extension above the 70 this week, which was an entry here, which you would be out of. So you'd have got in on that big push up, and that would be the reverse alert you'd have taken, and you'd be out. So nice easy trade there. Covered the yens. They're all going mad. They are all mean reverting now. Euro Swiss. Sorry, that Euro Swiss is. I didn't look at the ADR on that. So again, Swiss franc powering up on the yen. So we always get yen strength and Swiss franc strength typically coming through together. So it looks like we got a weak euro this morning. Yeah, that's gapped down. What the hell's going on with the euro? French CPI. Wow, look at that. So yeah, big CPI drop. Look, we were expecting a 1.6. We got a 1.2. That's the NSA preliminary. It's not the main one, but that's in an indication that inflation is coming down way too fast in Europe, which means there's a high probability the next time we get the core CPI figures come out that we're going to hit that 2% target, which means that needs to come down faster. They've already dropped it in anticipation of it dropping too quick. It looks like they're going to need to do it again. So weak euro potentially coming through. So again, today, be careful if you're long euro. I'm long euro pound. That's really annoying. I got stopped out on this yesterday. I took another aggressive drawdown control yesterday. Stupidly, I normally, when I do aggressive drawdown controls, obviously they use a stop loss, and I usually before I go to bed, which is normally like 10:30 or something, so what I normally do is before the market goes into overnight swaps, if I've got a stop loss close, I normally move my stop away by about an ADR just to get it well out the way, so that I don't get taken out on overnight swaps. And I forgot last night. And as you can see, this candle, the overnight swap, they spiked it down, took my stop, and then obviously we went back up. Now, I would have been stopped out today anyway, so that's fair enough. But that's a lesson in overnight swaps. If you've got any aggressive drawdown controls, and this is the manual part of trading, got any aggressive drawdown controls and you're close to it as swaps coming, especially Aussie and New Zealand, because they spread like crazy at the overnight, just move it away. So that cost me 1,700 last night, unfortunately. But I will be taking another trade this. Oh no, sorry, I did. I automatically took another one last night because I was like hacked off. Stupidly, I took it while the swap was that big. That's the candle I took the trade on. Yeah, that was the spread last night. So I cocked up twice last night. Just goes to show automation can't make stupid human mistakes. That was me cocking up. So I was going to get in another one today, but that isn't an aggressive. That's a normal position. So if we do push down further today, the EA will be getting into an aggressive drawdown control position at ADR. So what we're looking at today is potentially sweeping the weekly low and then pulling back from the weekly low. So I'll be getting an aggressive drawdown control position on that euro pound. So I just covered the euro pound when I should be covering the other euros, but that's, we've got euro Swiss hitting ADR. So I was just seeing what was going on with the euro. So that's a nice mean reversion opportunity, 125 ADR. So that's a big potential propulsion move. And again, this Swiss franc strength that we've just seen coming through, which isn't as big as the yen, will wane with the yen as that tends to pull back as well. So euro odd. Did I cover the euro odd? Can't remember. We had an extension last on Monday, looking for a pullback up into propulsion, which it did. So if you got in and out on that, brilliant. If not, you're still in it. You haven't really gone anywhere this week, have you? So you'd be looking to take another entry today. 4-hour RSI extension on that one as well on Monday. So you'd have been in on either of those, target into propulsion. Euro CAD. So I just moved my chart down a little bit. Should move that up a little bit as well. I keep mucking about my chart because I've been doing video stuff and I never get it in the right place for the streams again. Euro CAD, excuse me, sideways. So had an entry there, as you can see, an exit. So that was that 4-hour RSI extension out on that one. It's just sideways at the moment, the Euro CAD, not really going anywhere. You had an entry there to go long again last week on the hourly target in propulsion. We haven't got there. So obviously it's just flip-flopping around at the minute, not going anywhere. So it's either going to come down and test last week's high or last week's high or the previous week's low, which is this area down here. Right now you're bang in the middle of the range. There's no point in trading out of here, really. You want to be getting in down here or up there. Euro Swiss covered, euro pound. Well, euro Swiss is an ADR reversal opportunity today. So drop down M5, wait for a reversal alert, which you're not going to get until you get all the way up there at the moment. But MA cross potential as well to get in on that one. It's a long way away. Even the MA cross with a position trader EA is a long way away. Look, that'd be good to just hit the button on. Look at the rejection going on at the moment. So that's limit order triggers. That's the weekly low. So they're rebuying last week's low. So it's a good looking long. Euro pound covered. Euro New Zealand sideways, but we are down at support. So we tried to get down through support this week. Couldn't. We came back, retested. We're bouncing again. Potentially looks like that, doesn't it? But that news we just had on that CPI could well weaken this euro. So we'll see what happens. It's not the main figure, but it is an indicator that the main figure will be weak. So potentially we might get a drop on that euro, in which case, in Euro New Zealand's case, we've got about a 250 ADR move to the downside to come down to that previous low. Euro US dollar, that's flip-flopped around a lot. So you can trade this in any direction, really. I'm just waiting for opportunities to get in. I had a long opportunity there, which I got out of way too quick, which flew. I had a long there, which was lovely. I had nice shorts there. So another one there, another one there. So loads of opportunities, Euro US. It's very, very liquid, same as the pound US. So at the moment, because everybody's reducing interest rates, longing or shorting doesn't really matter. There's no bias. Everybody's short. So doesn't really matter which way you get into it. I just haven't had any opportunities, as you can see, apart from that one there, which I got out of in this propulsion move in case it dropped. And obviously it didn't. Wrong move, but still profitable. But yeah, as you can see, no signals this week. We have had ADR reversals on it. So you had an ADR of... Oh, no, I have had one, sorry. Tell a lie, look. I traded the ADR reversal. So I got in on that move and mean reversion. So I took an ADR reversal this week. You had another ADR reversal there. So anywhere here, ADR on this is 70. So that was ADR there. So you wouldn't have had a signal on it, unfortunately, if you're using the EA, because we didn't have any pullback. So ADR resets next day. But you did have an ADR long there. And if you did take a manual ADR short there, yeah, it's just, this is a lovely pair to trade at the moment, the Euro US. It's just up, down, up, down. It's news, undo it, news, undo it, news, undo it, news. It's just going to keep doing that because there's no bias. So ADR reversals, this is probably one of the best pairs to trade at the moment. Pound odd. No extensions on RSI, as you can see this week. It's just been very, very sideways, very, very rangy. It's not going anywhere. We had a 4-hour RSI extension back here. You wouldn't have got a second on that. Might have done. This needs to be 50. You might have got a second in if you did get into that, and that you're out anyway. But as you can see, it's just not going anywhere. So very little you can do with that at the moment. I don't think there's been any ADRs this week either. There was an ADR there. Oh, actually, yeah, you'd have had an ADR reversal there this week. Second entry out. So you'd have been out on that one. But apart from that, it's been nothing to do with that one this week. Pound CAD shorts. So again, stuck in this at the minute. Pound CAD. I've taken already. I think that was about 350 or something. Can't remember how much it was. So yeah, 320. So I've taken 320 out of it already. It's just not going anywhere at the minute. It's just stuck flip-flopping around. I had a break-even exit yesterday, as you can see. And I sat there, sorry, not yesterday, it was the day before. I sat there the day before in the evening. So in the evening before I go to bed, I just open my charts about an hour before close and just look at all my positions and decide whether or not I just want to take a partial on anything. And I was sitting there with this trade here in around about $1,000, 1,100 I think it was, in profit. And I thought, shall I do some drawdown control? Because it's not really going anywhere. There's $1,000 I can bank, and you know, I could just bank that and put the trade back on and wait for it to come down again, or I could bank it and do some drawdown control just to bring the average into the propulsion gap. But I decided not to. And obviously yesterday it completely screamed back up to my entry. So if I had have done, I'd have taken $1,000 profit. It would have pushed up and I've put that trade on again up here and I'd be in profit on it again. Wrong call. But it's just stuck. So my target, one of the other decision-making factors for me was, it was a quarter of an ADR away from hitting target, about a third actually. And I thought, well, it's just got to push down by half an ADR tomorrow. It will hopefully come and undo this propulsion gap. But so I'm still short on it, but it's not going anywhere. So stuck at the minute. ADR reversal yesterday on this one. So this was somewhere in the region of 140. ADR on this is 100. So this was about 140 ADR, something like that. So you had an ADR reversal opportunity there at resistance, which is playing out nicely for you today if you took that one. Pound Swiss, flip-flop, just nothing this week. Dead. Can't do anything with it. So, waste of time. Down into here, but there's no propulsion moves here. This is just very nice, even trading all the way. And then you've got a big spiky move there, breaking that high. which they've came down and added to twice. So that propulsion seems to be holding nicely, but that's your only target to the downside, but it's not got extended or just done nothing this week, so nothing you can do with it. Pound New Zealand, same. Big moves, ADR reversals this week, so lovely ADR reversal trade there. You had an ADR reversal, I think, there. Yeah, so that was 125 ADR there as a short, so you'd have got in there and out yesterday. So 2 ADR reversals on that this week, but it's not gone anywhere. So you had also an RSI extension down here, so there's the reversal alert and retest on that RSI extension, nice and easy. Pound US dollar, haven't got into this this week. It's pushing up on the US dollar weakness at the minute. So the last trades I've had on this have been very, very textbook. Yeah. So just getting out on those profit take moves, very easy. We're waiting for one still on this. So at the moment, it looks like this is potentially turning into the reversal. However, obviously, we need to see what happens with this news. We're not changing interest rates on the pound until probably November, maybe October. We might get one next month, but at the moment that kind of makes the pound sort of neutral, and at the minute that US dollar is very, very weak, so it's going to struggle, I think, to do these moves. It's going to be easier for it to do those moves at the minute. However, it only takes Bailey to come out and go, in light of what we think is happening with CPI, we will do an interest rate drop in October and we'll be down. So very difficult to call from a fundamental perspective, so I don't mind really trading this in either direction. My exposure this week didn't allow me to get on that one. I had pound short twice with pound CAD and euro pound, which I'm stuck in, so I couldn't take this one here. And sod's law, that's the one that played out. So yeah, unfortunately, but so yeah, trade it in either direction. I am, but I'm just waiting for some information from Bailey really as to decide which way is best to go. But same as the euro US dollar, it's the second most liquid pair out there, pound US dollar, behind the euro US. So you're going to get really good market structure on it virtually all the time, because the market is using pound, euro and US in the vast majority of its transactions. More than 50% of transactions in Forex are through US dollar. So you're going to constantly get that battling with the top two currencies. So it's always got lovely market structure. It's very rare it goes into squeezes. But the only time it does go into squeezes is when you get a fundamental shift. If they suddenly start dropping rates and we go, no, actually we're going to put them back up again, it's just going to go parabolic. But they don't tend to. We are a massive trade partner with the US, as every country is. So it's, again, not in their interest to get these interest rate differentials too far out of balance, because it makes trade hard. So anyway, either way, New Zealand CAD pushed up this week and big retracement. So we've had ADR reversals. ADR reversals this week. Somebody contacted me this week about ADR reversals in Telegram. And I think it was actually somebody else posted today in Discord. Their chart. Oh no, that was Abdul using H4M15 mean reversion. Had a great week. But somebody else posted to me as well with the ADR reversals they've been doing this week. Virtually 100% straight in, straight out, with either one or two trades max all week. Just so easy, because all we've had this week is like V-shaped recovery and A-shaped recoveries everywhere, haven't we? And if it hasn't done an A-shape or a V-shaped recovery, it's pulled back to 61.8 or 71.9 retracements on virtually everything it's done. So everything beautiful. Again, lovely ADR mean reversion. You could have taken the RSI on that as well this week. You've just had one there, not an ADR, but not an RSI rather, but there was an ADR reversal yesterday on that one. I posted this in Telegram. I took this one yesterday on another account and out. So I posted those this morning in the ADR reversal channel, which I just set up. So that was Aussie CAD. No, it wasn't. It was Aussie US and New Zealand CAD. So it was that one. So yeah, it's been some really nice trades on ADRs this week. New Zealand, Swiss, sideways, mess, just not doing anything. New Zealand, US. So we had one trade this week, which was the H1 RSI extension. I think this was an H4 as well. Yeah. So this was an H4. So I got in because it was an H4 RSI. So it's basically the same trade as this one here. This one took a week and a half to undo. This one undid the next day, because we've just had loads of lovely movement this week. So you could have got long on that yesterday as well on the ADR. So that was also an ADR extension to the downside. So that move back down was 98. ADR is 67. So that's 150 ADR-ish move. You had a big push up with a bull candle there, which would have been your entry. You'd have sat in it overnight and got out in London yesterday. US dollar CAD took this one off took this one off this morning. So this was the entry from Tuesday, sorry. ADR extension to the downside, hourly RSI extension. This was also a 4-hour. Yeah. So this was also a 4-hour RSI extension entry. So I took it out looking for a retest of propulsion and that low. Yeah. So this area here, basically we came back and retested it, and then that propulsion move is the break of that level. So I was looking for them to retest and add at that level. So I got in long and got out there. So yeah, nice easy exit today on that one. Obviously euro pound I did a drawdown control on, so I banked $500 on that, I think. 480, but I did 1600 drawdown on the euro pound aggressive drawdown control, so it put me 1200 down. Still up 6 on the month, but annoying that one today, but not a lot I can do with it. Euro pound, it's been a pain in the backside, still is. So yeah, US dollar CAD out of that one. So you've had lovely long opportunity off the back of this drop this week. So all played out, whether you got in on H1, H4 or ADR, all worked. US dollar Swiss sideways. So you've had 2 opportunities on this. You had an ADR hit to the downside long, you had an ADR hit to the upside short. Same with that H1, and you was also a 4-hour just about on the 70 if you took the 70, but I wouldn't have taken that. I would have waited for it to get deeper. But you know, when the market's like this, it's virtually impossible not to make money. You can't not make money. It's impossible. If you're a mean reversion trader and the market's going up and down, you just bank cash. So it's been a fairly decent week for most strategies. I've just been in the wrong things, unfortunately, this week. But if you've been taking new entries, they've all worked out beautifully. So there you go. So there's all the pairs. If there's anything you want to cover, stick it in the comment section if you're watching the replay, or just let me know. And we'll cover some more stuff next week. So next week's plan is same as usual with the lives. I'm going to update the website this weekend. Let me just quickly check as well what we're doing here. I'm going to close this FTSE out. Close it, break even. So break even on the FTSE. I can't be bothered. I'm not sitting through this again. Look at it. Market shut, basically, as far as I'm concerned. There's no price action. You can't trade this. Look at the wicks on it. It's awful. It's not going anywhere today. So there's a danger of just getting hedged on it. Just make sure I close out my pendings. So yeah, I'll wait till New York. See if we can get some moves out in New York today. Bit bearish during Globex so far today. So it looks like they're continuing the move from yesterday during Globex. So watch yesterday's low. If you're trading Globex, watch yesterday's low. If it gets there, you've got a lovely previous day low there, which is that support in the US session the day before on the S&P. So it's a very decent support area coming up down here. See what happens with that this afternoon. So yeah, I'll update the live room page. I need to put the new member bit on there as well. So next week it's going to be business as usual, 8 o'clock. The streams are just going to be shorter next week, the free streams, and then obviously I'll be spending time in the member streams next week. From the plan at the moment is to do them at 9 o'clock. But again, I want input from members as to what they want. So there's options, which I will lay out as well. I'll put a post up for it in Discord. But there's two ways I'm looking at doing the streams, the member streams. Either we stream on a Monday and we don't do free ones on a Monday, and then Tuesday we do a free one, Wednesday we do a member, Tuesday we do a Thursday we do a free one, and Friday we do a member. So there'll be 3 member streams and 2 free streams a week, and then those streams can be longer. Or we can do a stream every day and have half of it free. And then, I mean, the member streams, there's no time limit on them. I'm going to try and keep them to an hour just to keep it short and concise, but it's an open forum. So I don't really know. It's kind of down to preference for the group, really, as to which way people would prefer it to run. But the plan at the moment is to do an 8 o'clock stream and a 9 o'clock stream next week. So yeah, these streams will be the same as normal. And it's 9 o'clock. So pretty much about that long. Gives me enough time to cover all the trades we've closed, look at what happened in the DAX and FTSE, do an analysis of FX pairs, news, talk about stuff. So there we go. Easy peasy. Do you need to separate roles in Discord? Oh yeah, it's already covered that, Danny. Morning, Guna. It's time. I've already said hello to. Maybe he wants to put Japan in higher interest rate situation. Yeah, I just don't know what his plans are. This guy. I don't follow politics overseas at all, really, because politics doesn't normally have too much impact on Forex, because it's central banks that designate monetary policy, not governments. Yeah, so the government is in charge of running the country. The bank is in charge of running the finances. You have somebody, usually the Chancellor in the UK, that talks to the bank. So our Chancellor talks to Bailey, and they thrash out options together for running the economy. But at the end of the day, it's the bank that's in charge of overnight rates. So I don't know exactly what the relationship is between this guy and the Bank of Japan, but if there is more of a connection where he's got more control, that might be why it spiked. But it could just be a knee-jerk reaction. It could just be the market needing or wanting to drive a load of new orders into the yen, and they've just used this news to find liquidity. I don't know. Could be a number of reasons. There's no point in looking for reasons because you have no control over it anyway. So if something happens and it spikes down, your job is to go, okay, that spiked down. What can I do with this? What can I use this information for to make money? For me, as a mean reversion trader, it's like, this is an abnormally large move on something that doesn't seem to be finance related. There's an opportunity. If that was a Bank of Japan announces interest rates will jump to 2.5% to fall in line with the rest of the world, I wouldn't be mean reverting that. But you don't know, do you? You don't know what to do with it. So why it's happened, irrelevant. What you do next, that's how you make your money. Mumo, I'm at work. I can't access the set file for now. It was one you shared on Telegram, ADR 150, risk 2%. One I shared on Telegram. Let me look in the Telegram files section. Get my bottle out of the way so I can see. ADR 125 I shared in the Telegram, not 150. That's this set file here. That one. Maximum 3 trades. So that is basically using 1% risk, not 2%. I don't think I've shared anything with 2% risk, have I? I don't use 2% risk on anything. But you could use 2% risk. So, I mean, if you went 2% risk and 0.6, you'd need to double the targets, basically. That one. So this set file works nicely. So I'm just doing some testing at the moment on ADR. So that set file works really well as it is. I'll just do 2 years so you can see it rather than 4. So this is just using 125 ADR with maximum of 3 entries. There you go. So it has a dodgy area in 2020. Just dodgy area. Market wasn't right for ADR. So, but yeah, as you can see, it's a really good set file. And it's basically limiting risk. So if you get into 3 trades, so basically what it's saying is if you get an ADR hit at 125, get in. If it doesn't work, get in again. If it doesn't work, get in again, but shut that first one out and keep our average really tight and close. This is a scalping strategy. It's designed to get it in and out fast. So that is the, it's a lovely set file. It won't work in all pairs. If it's a real trender, it's not going to work. So if it's a squeezy trendy pair, ADR reversion is not good. However, because this restricts you to a maximum of 3 trades, it keeps drawdown low. It just will obviously hemorrhage when you're going to squeezes. So, but yeah, it's a good looking set file. 20 grand drawdown. Oh, it made 70, right. I was like, that didn't do 20 grand drawdown before. That's because I put the risk up to 2%. Yeah. So it's made 77 grand on a 20 grand drawdown. So it's a 77% return on a 20% DD. So yeah, I was going to say, not trading that, but yeah, that's high risk, obviously. Prop. This is a perfect prop. One, if they allow you to trade like that. But the other thing, obviously, that is testable now is using timed exits. So get me out on a Friday. Don't do over weekend holds in case we gap. And you get big spread on those Mondays, which often will cock you up as well. And get out of the trades after 24 hours. So basically what we're saying is if you get into an ADR reversal and within 24 hours, it pushes down further against you by another ADR, you'll have taken a second and a third entry. You've closed that. If you've got into an ADR reversal and it's pushed down and it's flip-flopping around after 24 hours, close that. Yeah, so it's just the idea behind this is not necessarily use this or use drawdown control or use aggressive or use an exit strategy of any kind. It's an or, basically. So it's using one or the other, not only one. Yeah, is what I'm trying to say really badly. So if you switch that on, it obviously has an impact on the test. But anything that accumulates after you get in, basically, instead of it going against you and you taking a full loss on it, you just take a small loss. So the idea is it will just limit your drawdown further on stuff that accumulates. So it's a kind of an accumulation protection. And as you can see, it tends to smooth out the equity curve. You remember that when we started this test a minute ago, we had that bit where it went like that and then it took off. Now it's just taken off in a straight line because that bit at the beginning was where it dumped, didn't go where you wanted to, then dumped and got you. What happened on this case is it dumped and we sat around, so we closed it out with a tiny little loss or maybe a tiny little profit or even a break even rather than a loss. Yeah, so it handles it, as you can see, it doesn't make quite as much profit, but it reduces the drawdown by 50%. Yeah, so remember the drawdown a minute ago was 20k, it's now 11. Our profit is now 61k, it was 77. So we've sacrificed a little bit of loss, but it's a drawdown reducing exit strategy, and I'm loving it. And it's something that was introduced to me by David, my guy that I've spoken about before. He worked in a bank, now trades for himself, and I've been back testing all of his strategies for him with a new EA that I developed for him. And this is one of his main exit strategies. His main exit strategies are end of day close, timed close, and end of week close. He does not use any other close at all. It's only timed exit. So either you get in and it gets to where you think it's going to go, and if it doesn't get to where you think it's going to go, you get out at some point. That's it. That's all he does. And he's very, very profitable. But he does trade higher time frames. So I've just adapted his exit techniques that he uses and introduced them onto this at a lower time frame level. And it's particularly good for ADR reversals because, as you can see today, is an absolutely perfect example. Have any of these had a reversal alert yet? Swiss yen. So we've had a reversal alert on the Swiss yen, yeah? So you're long here, okay? So with this version of the position trader EA, which would have got in on that same candle because that's the moving average cross as well, so you're still in on the same place. What it'll do now is it will go, right, what are we expecting? We're expecting a mean reversion. So I'm looking for it to push up here, and I'm setting a target of 1/3 of an ADR. So where we are now, it's 145. 50 pips, call it. So we're looking for a move to there. That's a really small one, actually, isn't it? Could obviously go with a bigger target, but that's what it's set at. It's about 1/3 of an ADR. Because remember, we're using 2% risk in the EA, and we're targeting 0.6 return. So we're risking 2% and we're looking for a 0.6 return, which is 1/3 of an ADR. So we're risking 2% over one ADR and targeting 0.6%, which is 1/3 of an ADR. So that's all I'm looking for. It's a scalp, isn't it? This is a scalping strategy. So what it's going to do now is it's going to sit around like this all day and do that. And then as it gets to 10 o'clock tonight, it's just going to go shut. If Monday this thing screams to the downside, you lose 2% of your account. Yeah. Today at 10 o'clock, because it's Friday, we just close it because it hasn't done what we wanted. The whole idea is this should mean revert. They should take profit on this leg they've just put in. If they don't do it today, I'm not in anymore. So it means you just limit, you reduce the ones that flip-flop. You look at ADR reversals this week. We've looked at loads. Let's look at the Aussie CAD one from yesterday. Yeah. So this is the ADR hit. Was it Aussie CAD? Aussie US. Did I get out of that yesterday? Sorry, let me just look at that chart. That's New Zealand CAD. Sorry. I'm just trying to find an example that makes sense. So the entry on that one was there. Yeah, that was the entry. So that's your ADR hit. Yeah. The exit was there. 1/3 of an ADR. So if I measure that, ADR is 65. So we're looking for 20. That was depends which risk. This is a slightly different risk profile I'm running over there. But yeah, so that's 1/4 of an ADR that one's running on, which is 16 pips, which is basically there. So it's got in here and it's got out there. I can't remember what I was trying to say now because I've completely thrown myself by trying to look at charts. But it's a scalping strategy is kind of what I'm saying. So if it flip-flops around and is at the end of today somewhere up here, we take it off. It hasn't worked, has it? What we're looking for is it to play out, it to do some kind of retracement on the move within 24 hours. The banks have got exhausted. We are expecting one of two things to happen. When you get an ADR hit, you're expecting one of three things really to happen. It's either going to be an A-shaped recovery as scenario one. The move is false. It was made on news. There's no reason for it. Market overreaction. Just come back to where we were before. The second scenario is it is a legitimate reason to push the market further. So we are going to flag and continue. Yeah, that may or may not give you an exit. If it doesn't and they continue, you will be scaling in and trying to get out the next day. or it's going to do a pullback, which is basically either a 30, 50 or 60 odd % pullback, and go. Yeah. So when you get an ADR hit, that scenario pays you every time. These scenarios pay you every time. This scenario sometimes will pay you, sometimes it won't. And it could go either into a flag break or it could go into a flag accumulation. So what we're doing by using this type of exit strategy is we're giving ourselves a 66% edge. When the market moves up on ADR, there's three things it can do: that, or that. This one pays us, this one pays us. 66% of the possible outcomes are cash. Yeah, that's why the strategy produces the equity curve it does, because it has a 66% edge. Simple as that. So by using the timed exit, what you're doing is on the 33% that don't work out, you're reducing the drawdown. Yeah, so it makes a massive impact on overall drawdown, but it will also impact on your profitability in the fact that if it does this, doesn't get to target, and then pushes up and you get a second entry on, and then it sits like this and doesn't hit your target, you take a loss on that trade, and then if it moves down, you would have taken a profit on the entire position, but you would only take a profit on 1 out of 2 positions. So that's why the profitability of the strategy is ever so slightly reduced. And in some cases, it's reduced a lot more than others, but the drawdown is always reduced because you're not holding squeezes. Yeah, so it's a lovely exit strategy. Part of what I'm going to be doing next week in the live rooms in the members is applying this to H1M5 mean reversion and H4M15 mean reversion strategies as well, to see what the impact is on those, because I think it's going to have a positive impact on those strategies as well. These are, because they're swing strategies, there's a lot more potential outcomes of what could happen. So I'm going to be playing with some different strategy ideas on that to try and enhance that type of strategy as well, because it's a lovely exit. I can see why he uses it, especially in his main day trading strategy. It makes total sense, because with intraday trades, you are looking to be right intraday. But the problem with most people and why they lose money is they use a stop loss. There's no point in using a stop loss because you can't predict price movement, but you can predict where you think it's going. And if it doesn't get there, you can get out, but you don't have to get out at a level where the market's going to move to. You get out at the end of the day or tomorrow or 48 hours. You could run the test in here and say, right, I've given it 24 hours to run. Let's see what would happen if we gave it 2 days. So let's give it 48 hours. So we'll say we'll get out if you haven't played out for me within 2 days. Yeah. I've never done this test, so this is new ground. And just say, like, I'll give you 48 hours. It's an ultimatum to the market, isn't it? It's like, right, I'm getting in now because you've pushed up. I'll give you 48 hours to pay me. Otherwise, I'm not going to play with you anymore. That's what we're saying, isn't it? See what the market says. At the moment, the market says it looks quite like it wants to play ball. But, you can play with this. But you've always got that Friday exit. And that's one of his main things is, because he's his background is in longer term trading, investment, basically, in investment banks or investment desks within banks. You're looking for, you are the COT report. You're looking at monthly, quarterly plays. So his main candlestick is this. Yeah. What we're doing this week. Yeah. Walk into the office in the morning. It's what we're doing this week. Where do we think the market's going this week? They're not interested in where's the market going at the open for the next hour. That's just orders getting stuffed into the market. It's got nothing to do with where we're going. It's just I've got to get these orders off my desk. He's looking at weekly charts and daily charts to see when he can get in. So, reversions on daily moves that get rejected, that sort of stuff. So it makes total sense to adjust your orders on a weekly basis when you're doing that. And this is where his intraday strategies come from, because he knows what they're doing in the week. These candlestick patterns, and this is again something I'm covering in the members, is everybody focuses very much on candlestick patterns, but nobody focuses on why that candlestick pattern exists. What is that telling you the banks have been doing, and what is it telling you the next thing the banks are going to do is? In all likelihood, nobody knows. Obviously the banks don't know, but it's about identifying what is going to give you an increased probability. And when you're looking at weekly movements, like I've talked about them before, like control candles. So when you look at control candles, it's their way of looking at what has the general consensus been for direction. That's all it is, a weekly candlestick. And in it, and a control candle, which is this in this case is a control candle. We didn't break and close above the high. We tried and didn't break, close above the high. We broke and close above the high. So what is this telling you? For 3 weeks, the market had nowhere to go, and now it does. Look at what the fundamentals are. What's happened this week? Oh, okay. So it looks like we'll probably go long for the next quarter. That's what they do. But intra-week, they don't give a monkey's, because all this is, this 3-week period is no opportunity. But we can't do that because we've got to make money on an intraday basis, haven't we? Otherwise, we can't pay the bills. So it's very interesting what he's a really good contact to have. There you go. So that didn't make a lot of difference whether I get out within 24 hours or 48 hours. I made 63 grand and went 10 grand in drawdown, 11 grand in drawdown again. So 24, 48 hours, don't make a lot of difference. And the reason I've picked 48 hours as my preferred is because I've done all this analysis and I know that it doesn't make a difference, because my analysis in Quant Analyzer told me that if you hold it for more than 24 hours, the equity curve drops. So I knew it was 24 anyway, but I've never tested 48 or 72 specifically, and I doubt you'll find there's any difference in the 72. In fact, it's probably worse, a 72-hour hold, because you're just hanging on to it for longer. It still hasn't worked, has it? We'll see what it is anyway. If you miss a day, we watch other people's streams. We're like that, Google. That's fine. Or you could just watch me every day. I'm not stopping streaming. I will be streaming every day. It's just I'm going to have a separate group for specific things. So you could always join that group and then you wouldn't have to watch other people. That's called system hopping, Dougal. And it's the way that everybody tends to run around in circles, losing money for the rest of their lives. Focus on one thing, forget everything else. Otherwise, you're never going to make any money anywhere. I know that because I did it for about a decade. I tweaked the ADR 125. Yeah, I was hoping to see your results of the same file, but with ADR 150 and 2%. I can do that. So it's 1% and 0.3. 150 ADR. Oh, sorry, and 2%. You want 2%. And I'll turn off the timed exits for the minute. You still testing the idea of changing ADR 10? Yes, that's again something I'll be covering in the members streams. I've built an EA which I will share with the members to test it, to get all the data out and extract that data. So I've got an EA you can have which will do an ADR analysis export for you. So you can crunch your own data, but for me it's looking like 60 at the minute. There you go. So there's that result. 35k with 18k drawdown. So it's a 1.8 profit factor. So it's good, but it's got some stagnation. It's behind my head. You can't see it. Oh, what? Come on, grab it. So it's got some stagnation here. And then obviously we have a run, and then we have a dip where we went into a squeeze, and then it stagnates there. So you've got basically, this is a 2-year test. You've got roughly, I would say, around about a year of stagnation and around about a year of run up. However, let's see if we can change that. And this is 150 ADR, isn't it? So a lot less opportunities. Got 118 trades in 2 years. Let's see if we can improve it. I've forgotten what the result was. It's 38 and 17 drawdown, wasn't it? It's probably going to help the drawdown a little bit. Yeah, and it hurts the profit a little bit, but helps the drawdown. There you go. Look at that. Massive difference. 17k drawdown reduced to 7k drawdown. So with 7,800, we were 17,000 something. So the drawdown more than halved. Profitability drops to 25k from 37 or 8, was it? Something like that, 37. So again, profit down, but drawdown down. It's a drawdown control mechanism. Don't forget, as position traders, not using fixed stop losses, we have to do drawdown control. You can't just get into a trade and go, I hope it goes back up again. Sometimes it doesn't. You can't do that. And this is where people get stuck. They get onto this, oh, this is brilliant. And they have 6 weeks, 8 weeks of it. Like, this is perfect. It's just making money. And then they get a squeeze and they go, it'll come back. And then they get further squeezed. And you're like, some point it'll come back. Why am I in 22% of drawdown? Yeah, you can't do that. Say from day one, we are not removing stops. We are still taking losses. Look at my P&L from yesterday. I took a 1,200 from today so far, 1,200 down. Yeah, I'm taking losses. Still take losses. You just do it in a different way. But the that is a massive drawdown control mechanism. That it's because we're basically saying, I'm not right. Yeah, and we're accepting we're not right. And the EA is going, yep, you're not having that anymore, but you've still got one. It's like shooting a gun, yeah? With this particular strategy, you've got 3 bullets in your gun, yeah? So you fire, you miss. You take a second shot, you miss. If your third shot isn't within 24 hours, that miss is not coming back. But if it goes back up again, you hit the target with your third shot, you don't take any loss on it at all. But it stops you continuously hemorrhaging. So the reason this works so well is when you get a squeeze, what you get is an entry, 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 and that will go on as long as it will go on. So that's trade 1, trade 2, trade 3, trade 4, trade 5, trade 6. This is limited to 3 trades, this set far. So by the time you get to here, you are automatically taking a loss there. But if that from there to there takes more than 24 hours, you don't take 100% loss. You take whatever that is. And it may be that you've not taken a second trade and it's just done that. And that's the beauty of it. It's great. I love it. I don't know why I've not looked into it before. Well, I do know why I've not looked into it before, because I tested it. I got told about it many, many years ago. And I just dismissed it because it didn't work with what I was doing at the time. And since David's been talking to me, and he's convinced me it's his focus point. It's the focus point of his strategy. So I thought I would implement and test, and it's obviously he doesn't like what I do, because the way that I trade is very high risk. It's position trading. It's high risk, high reward, high risk. Or rather regular reward, high risk. But that really makes a difference to the most problematic part of the strategy, which is drawdown. So there you go. So that's what that will do, using 2% risk at 150 ADR. So we took 104 trades. I think previously we took 108 or something. But, you know, try this as well. I prefer 125 ADR because it's just that little bit more stretched and the odds of it going further are much smaller. But try it with 100 ADR, because what you'll also get now is a hell of a lot more entries. Yeah, so we know that ADR gets hit 58% of the time, whereas the 150 ADR gets hit around about 88% of the time. Yeah, so we're really doubling our amount of trades by going with 1 ADR instead of 150. So what you're going to find is a hell of a lot more trades, obviously, but a more jaggedy P&L, because you're going to get into more opportunities. But in a range bound market, which is 80% of the time, like we've had this week, ADR is going to absolutely kill it. So it gives you an opportunity to generate a hell of a lot more profit, but you will see a lot more small losses regularly. Yeah, so same test period, 100 ADR. Remember what we were making before? 25k, 38k. I think the maximum we had was 70k, was it? 77k. When you're finished, it's doing a lot more trades, obviously, so it takes longer to run. There's a big loss. That's a squeeze. Couldn't do anything with that. Why am I holding 3 fingers up? So yeah, this year not had a good end this year, look. But made 91k, with 48 grand of drawdown. So again, 1.4 profit factor. Yeah, so that it's profitable. Yeah, hugely profitable. Doubled the account in 2 years. Took 48 grand's worth of drawdown. Yeah, but don't forget that is based on having a 2% risk on the account. So as we grow the account, our risk increases exponentially, which makes our drawdown increase exponentially. If you did this using a set risk over ADR, rather like a monetary risk over ADR, or suppose you could replicate it doing fixed lot size, then you haven't got an exit criteria from percentage, have you? Couldn't test that with this particular EA, but yeah, but that's because the majority of that drawdown, yeah, here, majority of drawdown is based on a 200 grand account. Yeah, we started with 100 grand down here in the corner. You can't see it. We've run up, run up, run up, run up, run up. The problematic period for the EA was with double the risk. So if you'd have been using it with the same risk that you had at the start, when you got to the problematic part of the market condition, that drawdown would have been 22k. But your profit would have obviously been smaller as well. Yeah. So again, this is the problem with the position trade EA. Oh no, it's not. No, it's not. What am I talking about? I can test that. Let me do this with 1,000 risk. This is going to be high, but it just makes it easy for me maths wise. I'm a bit dim. There we go. So $1,000 risk, and we go for 600 profit. So this is using a fixed risk over ADR, rather than a percentage risk. So this is going to give us a clearer picture of what drawdown would be with consistent risk. So this is how most people tend to trade, with a consistent risk, because you have a bank balance and you use a consistent percentage of that. If you keep increasing it, obviously, if you get bad periods, you get hurt faster and more. So this will give us probably a slightly smoother equity curve, but a more realistic result on what you would achieve, especially if you were trading prop, obviously, because you have got that your account doesn't really grow, does it? because you'll have blown it at some point and you'll have a new one. So if you're trading with a 100k prop account, you're not going to hold it for more than a couple of weeks, maybe a month if you're lucky. Some people maybe hold them for 6 weeks, but no one holds it for more than a couple of months. It's 0.03% of people or something ridiculous, the statistics, isn't it? So you, in realistic terms, you're constantly going to be trading with a set risk of amount of money. This is more like the equity curve you'd achieve with that, which again is still going to have that problem. You can't change the fact that the market wasn't right for mean reversion. There you go. So that made 36k, but drawdown was 13, so 1.46 profit factor again. So the profit factor is going to be the same. So 37k off of a so 37% return off of a 9% drawdown. It's good. It's all good. It all works. This is the thing. There's a million ways to use ADR reversion. Different risk profiles, different ways of getting in and out, and you know, there's 100 ways of working. The fact of the matter is, and this is why I do what I do, when the market's done that, it does that the vast majority of the time. That's our edge. We have a 66% edge with ADR reversal. Yeah, the edge is the same, but the probability of the edge playing out changes with ADR level. So ADR 100 there's a 42% chance of getting exceeded. Then it drops to 23% at 125, which is my kind of sweet spot I like. But as Mumo's just said, 150, there's a 12% chance. So you're going to take a hell of a lot less trades because it doesn't get there anywhere near as much. But when it does get there, it's gone way further than normal. Therefore, the probability of it going further is less. Therefore, the probability of it reverting a percentage is higher. So, but the edge is always 66% because there are three outcomes: profit, profit, no profit. 66% edge, because there's only 33% of the time it's not going to make you a profit. But the probability of the trade strike rate, if you like, working out is better the higher ADR. If you test it on 200 ADR, you'll probably find it's way better, but you'll hardly ever get an entry. Those are the ones you want to increase your risk on, really. Let's test it. See, I don't know how many times we got 200 ADR on the pound US dollar in the last couple of years. It can't be that many. One, two or three, maybe. This is probably the dodgy period, but obviously we can't see it in any more detail because we're not taking many trades. So there you go. So we only took 21. So there was 21 times in 2 years we exceeded 200 ADR. So very rare. We made 4,600 and we took 3,600 drawdown. So profit factor is 2.37 on it. But you're only going to take a few trades. But look at the equity curve on it. Yeah, I mean, realistically, you had one loser there. And then you had that period where it just didn't, you know, whenever this period started, which is around November 23. So this year, basically, isn't it? We need that bigger, we need a better profit curve to really see when that started, that dodgy bit. Where's the ADR? Be interesting to look at the chart and see see what happens. It's going to be back in 23, isn't it? So somewhere around there. I'd imagine that's July. Probably on these news spikes, I can pretty much tell you where it's going to be, I reckon. That is probably a bad area. That will be a bad area for ADR. But H1 is, you know, for swing, it's not a problem. For ADR, it is a problem. What have I done wrong? That's just made a phenomenal return. Look at that, 30k profit off of a $4,000 drawdown. 2.07 profit factor off of 200 trades. What have I done there? Trying to find it, trying to make it break. I've made it way more profitable. I'll tell you what it is. It's because I changed the risk profile from percent risk to monetary risk. Again, because there was no high risk towards the end of that, there was no massive drawdown. That's a good set file, that. Like it. Again, play with it. Play with the position trader EA. Demo's free. Go and get it. Play with it. Or if you've got it, use it. I've got it running at the moment. I've put it on. I put it live on. I put this set file live on an account yesterday, because I love it. I think it's brilliant, and I think it's energized my kind of love for ADR reversals, because they've always been one of those strategies which it's because it matches RSI, mean reversion, very closely. When we get an RSI extension, it's usually because we've had some kind of ADR extension. It always gets you, if you turn an ADR reversal that fails into a position trade, you're always going to get roughly the same as you get with an H1. With this strategy variation, it becomes not a stop loss strategy, but it becomes more of a, I know I'm not going to be in it, I'm holding at the same time as I'll be holding an H1 trade, an H1M5 mean reversion trade, because I'll be getting out of this in 24 hours. So it's it's a banked 400 this morning. Forget that 55 yesterday. That was me cocking up. I had a data issue on the thing, and I said it live, and it took a trade because ADR was 0, and it was obviously above ADR and below ADR at the same time, so it screwed up. Yeah, it was on Euro Pound and Euro Swiss at the same time. But yeah, it's so I've set it live basically to forward test it, because back testing is great, as we know, but forward testing is where you make your dough. So I've set it live to see what impact that will have. That set file is even better though. In fact, I think I set it up. Yeah, I'm using 1% risk. I'm using 125 ADR as well. So it's exactly the same set file I'm running live now. Time-based exits are turned off. Oh, that's a stupid thing. Oh, good job. I've got to check that, isn't it? Okay, I need to do that. I need to check that. This is running all pairs as well on here, as you can see. So as you can see, I am hoping that the yen has a little weak spot today, because I've got 1, 2, 3, 4, 5, 6, 7, all of them yen trades on, because every yen's hit ADR. But when you're using a stop loss, these days are going to be holy cow, or maybe not holy cow, because we've got the opposite cross giving us an opportunity to get out of some of these with small loss or no loss or profit. So we'll see. It'll be fun. It's always fun. Morning, Chucks. Are you still testing the other day? Yep. The max open trades says it's set to 3. So when you get 3 trades open, it will close 1. Yeah. Basically. So what it does is it checks if the trades are above that number, it closes a trade basically. So every time a trade is taken, it goes, am I trade number 4? If I am, scrap trade number 1. So it's designed again in strong squeezes, yeah, where you have the market doing so from there basically to there, you've had very little pullback, if any. So what it's decided to do is, if you get to in the position trading strategy, I use 6 as my number. So if I get 6 positions on, it's really not working, and I'm going to take too much drawdown. So it will close out the oldest trade. I've moved from the MRA to the position trader EA, and I'm used to targeting ADR for TP. Not sure how I'd target that with the position trader EA. Very easy. So if you are risking 1,000 over 1 ADR and you want to target half an ADR, what is half of 1,000? 500. Yeah. So if your risk is always based over 1 ADR of movement. So if you are risking $1,000 over 1 ADR and you get into a trade, and or RSI or whatever the strategy you're trading is, and it pushes up by half of that, it's half an ADR. The target needs to be half of that. So if you're using money, so if I set this like now to 1,000 money risk, 500 for a single trade, and then I change this to 1,000, what it means is, if I've got one position on, I want to target half an ADR. If I've got more than one position on, I want you to target 1 ADR of movement. If you're using percentages, you're targeting 1%. Your single trade target, if you wanted to target half an ADR, would be 0.5. Yeah, so I'm risking 1% over 1 ADR. So when it moves half an ADR up, I will be 0.5% in profit. And if I want multiples, I could go 0.75. Oops. So I could say if I've got 2 trades or more on, I want to target 3/4 of an ADR of movement in my way. So yeah, that's how you would do it. But the reason I don't target ADR, the reason I removed that, I didn't remove it from this EA, I didn't add it into this EA, which was in the old one, was because targeting ADR is good, but you're better off, in my opinion, and as you'll see me do all the time, there's a prime example of why on this chart right here. You're better off targeting where market is going. Yeah. So this trade here, when I got in, the target was here. Yeah. Didn't work out. So I added another position. Target was then moved here. The next propulsion gap up. So my average is there. My target is there. Didn't work out. It moved up. There's no other propulsion gaps to target. My target remains the same. Price pushed up. I took another couple of trades on. Yeah. So my average on those 5 positions is now somewhere around here. My target now moves up to this propulsion gap. Yeah. Worked out. Yeah. Price pushed back down again into that propulsion gap. Yeah. I didn't get out for some reason there. I left it back down here. So maybe I didn't target that one, but I just, but that's what you could have done. My average probably wasn't there. My average was probably here or something, which is why I didn't get out there, because it was pretty much a break-even exit. Or maybe I knew there was news coming the next day or something. I don't know what my exact reasoning was, but targeting just because it's moved the distance isn't the best thing to do. Targeting where it's going is. Where does it go? Propulsion gaps. Why do we have this indicator on here? Because it tells us where price is going. Yeah. At some point with high probability, it's going to come back here or here. Yeah. So that's why we use targeting like that. So I personally don't have targeting because I want it to get in for me But I can see, you know, and everybody can do this. Yeah. Look at my average on the euro pound and look at where my target is. Bad example. Euro pound's a bit of an anomaly at the minute. Look at my Aussie dollar Swiss. Look at where my another bad example. Oh, it's because I'm on H4. Sorry. There we go. Because I'm on H1. I use H1 propulsion targets. Look at where my target is. Yeah. Why? Because there's a propulsion gap. Yeah. What does my price do? Move from propulsion gap to propulsion gap to propulsion gap. So let's say, for example, this now pushes up like this today and goes bang. And next week we're here. There's a propulsion gap. Yeah. So I will be in another trade here. I'll be in another trade here. And my average will now have moved up into this area somewhere. This propulsion gap now becomes my target, because the market will move away from propulsion gaps. Here's a great example. Look on the chart right now. Really good example. So we got a propulsion gap here. Price pushed away from it. Could have got in short, would have targeted that propulsion gap. Didn't get there. Price pushed up, made a new propulsion gap. That would become the target. Yeah. Price pushed up, made a new propulsion gap. That becomes a target. Yeah. Price continues to push up, propulsion gap. That becomes a target. It hit that one. It hit that one. Still hasn't come back to this one, but it doesn't matter, because we're averaging in and adjusting our target. We pick the closest target we can achieve below our average price. For me, my average price is here. There are no propulsion targets until we get to here. So that's what I'm targeting. It's a long way, 150 ADR. And what I might do today is because this trade's dragging on a bit, if this comes down and hits ADR today, which is also yesterday's low, and that profit is $500, I might just go, I'll take that. What will happen next week is when it pushes down into propulsion gap, I'll go, why do I never listen to myself? But it doesn't matter. I need money and I bank money. Yeah. So that is where I think it's going right now. But there's no other targets for me. There is a target indirectly here because it's yesterday's low. And we know that there's also a weekly low coming up as well, which is very respected, which is a previous propulsion target. They bought this 5 times. We pushed up, made a new higher low at yesterday's low. So either they're going to continue this move up, which means they're going to buy it here, or they're going to buy it here, which they have for the last 5 times, or this move isn't working out and we're going to come back down and test that propulsion target. I have no clue where it's going. No one on the planet knows where this is going, but those are where it's likely to go, and I don't know which. If I'm in profit there and it's a Friday afternoon and I'm going to the pub, I'm taking my money. If I'm sitting at break even this afternoon and I've made $2,000 on something else, I could go, screw that, I'm out of this one. It's a bloody awful trade. I didn't make any money. I haven't lost anything, haven't made anything. Who cares? I'm out. It's Friday. Or I can hold it if we're sitting here and wait and see if they test the previous day's low on Monday, or they test last week's low on Monday, which they usually will. And when they test it, they'll either get a limit order bounce, which will work, or a limit order bounce, which will get overrun by sellers and will be here. It could come down here. It could come down here. It could go anywhere. But what you have is the ability to get into trades. You can see the likelihood of it going to different locations, but you don't know when it's going anywhere. You don't know how far it's going to go. But what you do know is every time it makes a move, it creates a propulsion gap. And the propulsion gaps act as targets. And everything you see that is grey on this screen is price retesting propulsion. So when you have lots of blue below you, you have areas that it's likely to go to. And if it doesn't, it will make more areas. And you just scale in until it does do one of those areas. The quicker it happens, the more money you make. The longer it takes, the more pain you sit through, and the longer it takes to make money and the less money you tend to make. But we're not here to get it right. We're here to make money. We're here to extract money from market movement created by banks and institutions we have no control over. We're not here to go, I'm the best trader in the world and I've got a 75% strike rate. I don't give a monkey's. You're probably not profitable, because if you've got a 75% strike rate, you're certainly taking more losses which are bigger than your targets. I can have a 100% strike rate in a week. If I target 1 pip in profit and I'll take up to 100% drawdown on my account, I can show you a P&L with a 100% strike rate. Does it make me profitable? No. Am I going to last long? No. But can I sell you a course on it? Of course I can. Yeah, it's not what we're about. We're about making money, and you make money by waiting for the market to move you into profit. You can't target a quarter of an ADR because of a quarter of an ADR. You target where it's going, which is with an EA, I can build in propulsion gap targeting. The problem with it is discretionary. And I don't like building anything into automation that is discretionary based. So with this, you could say, I only want propulsion gap targets that are bigger than X or smaller than X, or are a certain distance away from my average, and there's too many or ars if buts when you're targeting this. It's something you have to do as a trader, yeah, which is why you see me every day. I come in here and I go, oh, I've taken another trade on, I need to move my target. What have I got on? Pound CAD is the other one, isn't it? So there you go. So there's my average. There's a propulsion gap. But is it a good propulsion gap? And again, discretionary. What's a good propulsion gap? What's a bad propulsion gap? In my opinion, a good propulsion gap is an accumulation break. Yeah, that is a propulsion gap. Tiny little one there. Is it breaking an accumulation? No. There's your accumulation. There's your accumulation break. Is that a good propulsion gap? Yes. Is that one? No. Yeah. This is discretionary. It's an accumulation break, but it's also a V-shaped recovery. So I would class that as just an undoing of that move, therefore not really a good propulsion gap. But have I got any other targets? No. So if it gets to that low and starts to bounce, I have an option of taking a break even on this trade, having banked $300 on it, sat in it for 3 weeks and made no loss. Discretionary. Or I can hope that when we get to that low, they bounce and drop. Yeah. It could come out of this propulsion gap today and break the weekly high, or it could do it on Monday. It could sit here and bounce off of this propulsion move for a week. If it does, I'm going to take another position. The average is going to move up. This still is my target. But I have also now got the option of that being my target, which will become this week's low. So this black line here will be drawn here. That becomes a target. You always have to look at where price has been, because we have no way of knowing where price is going. But we know and we see and we have seen forever that price respects previous highs and lows over and over and over again. Yeah. High, propulsion, retest, retest. Yeah. So the reason I have the support resistance propulsion indicator on the chart is because it shows me every key level that price has used in the last 3 months. And it shows me all the large bank orders that have been entered in the last 3 months. So I know where the banks have been in the last 3 months. And if they continue to do what they've been doing for the last century, which is moving from zone to zone, we have a plan and a roadmap of making money. What we don't know is, when do we need to press the button? Because we can't control that. So what we have to do is just wait. And it's all about controlling risk. And this is why we have drawdown control mechanisms built into the EAs, so that if we are in too early, we can get out of some of the trade and take losses. But we need some kind of condition to tell us that there's an opportunity coming. ADR, RSI, relative strength between two currencies is high. The likelihood is the profit take move will come. ADR has been hit. The likelihood is either it's not real or it is real and they'll take a bit of profit before they continue. Those are our two main stretched condition indicators. But whether it works or not, no idea. How far it's going to go, no idea. But you know where it's likely to go. Yeah. So if you took an ADR reversal on this yesterday, which it was, yeah, this is an ADR. That's 140. ADR is 100. So it's 140% of ADR. It pushed up, pushed up, pushed up. You did not get any signal to go short on this until the end of yesterday. Yeah, here. So it said, I'm going long, I'm going long. I'm 140 ADR. I'm nearly at 150 ADR. And sellers enter the market. No more buyers left. Buyers cannot buy because there are no sellers. Yeah. So the buyers go, we can't buy anymore because there's no one selling any. So what can happen? Nothing but market come down. Structure break. Sellers take control of the market. Crosses a moving average. Sellers take control of the market. Sellers remain in control of the market. There's no more buyers left. Boom. Where did we come to? Where the buyers bought from. Where did the buyers buy from? Here. Accumulation. Break. Add. Potential add. So if you're short, where do you target? Where the buyers are going to come in next. Weird. I've got LED lights, not LED lights. Yeah, LED lights. All around the back of my, I've got wooden paneling on my wall. All around the back of it, I've got LED lights, and they've just turned themselves on for no reason. Weird. And the doorbell's just gone. One sec, sorry. Bear with me 1 second. Hi guys. Sorry, I'm going to have to cut this because the wife's out. I didn't realise, and our shopping delivery's just arrived. So I'm going to have to go. So yeah, I'll love you and leave you there. I'll be back on Monday. I'll post all the information in Telegram, in Discord about what's going on next week, and I will put on the website what's happening with the live rooms and everything, so you know exactly what's going on. All right. So yeah, anything else you need, let me know in Discord. I'm out of breath now because I just legged it up the stairs, and I'll be back on Monday. All right, so have a good weekend, and yeah, we'll continue next week.